The demand momentum has failed to prop up the paint sector earnings as raw material prices have played spoil sport. Both Asian Paints and Nerolac posted weak results for the second quarter of this financial year. Yash Upadhyaya is now standing by to compare and contrast these numbers. Morning, Yash.
Morning, Neeraj. So you rightly mentioned for the IT how they've not been able to deliver despite the rupee tailwind. In this case, it's the exact opposite because while the demand has been quite good for the paint companies, as we've seen in the quarter gone by, the rupee headwind and the higher crude oil prices that have played a spoil sport. So as far as the Q2 numbers are concerned, both Asian Paints and Kansai Nerolac came out with a disappointing set of numbers which were far lower than the analyst expectations. But the only key positive that I would take out from at least Asian Paints' numbers is that the demand momentum continues to grow in the domestic decorative paint business. The management does not give us an exact number, but from their press release, they have mentioned that the volume growth in the domestic decorative paint business for the second quarter was in the low double digits. So it is expected to be about 10%. We spoke to the management of Kansai Nerolac as well, and they are telling us that the volume growth stood at about 9.5%. Why this is a positive for Asian Paints? This is a third consecutive quarter for the company of double-digit volume growth. And as far as Kansai Nerolac is concerned, it is a bit of a negative. That is because they've been consistently doing far higher volumes as compared to Asian Paints, and a 9.5% volume growth for them is the lowest in several quarters for that matter. Also, what was the key takeaway from the management commentary was that the demand continues to look good in the domestic decorative paint business. As we all know, Kansai Nerolac gets a significant share of their revenues from the industrial paint business, and they categorically told us that the demand continues to remain buoyant on the domestic decorative side, while the industrial paint business might be subdued. Now, the higher raw material prices, as we were mentioning, that has had a negative bearing on the gross margins, which are at record lows when it comes to both of these paint makers. What are these raw materials? It is the crude and the crude linked derivatives. We've seen crude oil prices hit multi-year high, cross the $80 per barrel mark, and that has had a negative bearing on it. To double the pain is the weaker rupee. And now, because of that, the gross margins for both Asian Paints and Kansai Nerolac, for Asian Paints, they are at about 39.8%. They've been consistently in the range of 40 to 42% over the last 3, 4, 5 quarters, but now they've breached below that level. For Kansai, they just breached the level of 40% gross margins in the last quarter, but they've been fairly stable around the 39 to 42% gross margins, and they have fallen to as low as 35.5% in the second quarter, which is a big negative. Also, the profitability, that took a big hit in the second quarter. We saw Asian Paints report a 14.5% degrowth in their profits, while Kansai Nerolac reported a 16% cut in their profitability, which is for Asian Paints the lowest in the last 4 quarters, and for Kansai Nerolac, that is the third consecutive quarter of negative profit growth, which is in my opinion not a very good thing, because Kansai Nerolac has been consistently struggling. That is because they are not easily able to pass on the increasing raw material prices to the consumers, because industrial paint business, that requires a bit of a negotiation with the company, and that tends to happen with a lag, and we are seeing all these factors translate into their profitability taking a hit.